Welcome to The Critical Path, Greater Vancouver Realtors professionalism and innovation-focused podcast. I'm your host, Jesse Lalime. Each episode, we sit down with industry leaders to discuss the critical issues affecting our profession and the paths we must take to overcome them. As industries go, real estate and mortgages are intrinsically linked. You can't really have one without the other. Realtors often use the phrase, buying a home is the biggest investment you'll ever make, and that's where mortgages come in. Lenders lending money the folks need to make that biggest investment. And much like the real estate industry and its consumers, prospective home buyers are looking for more from their mortgage professionals. More information, more options, more of a hand in the process, and more critical guidance from the professionals they use. Our guest on The Critical Path today is Don Scott, a 36-year veteran of the mortgage industry and founder and CEO of Frank Mortgage, Canada's first fully online mortgage broker. Don, welcome to The Critical Path.
Thank you. Pleasure to be here.
Our listeners are generally pretty plugged into the housing market, right? And from your vantage point in the mortgage world, what are some of the maybe more advanced or less obvious trends that you're seeing today that might not be on the radar of our members right now?
Yeah, that's a good question. I'll talk about the tech a bit because I think there's a lot of unknowns about what's going on with the technology innovations in the marketplace. The reality of the realty business and mortgage brokerage business is it's still a personal business. Mm-hmm. It requires the human touch, and so when we talk about technology, we're not necessarily talking about completely displacing that because people want to talk to someone about such a big investment. But technology's there and it's happening, and sometimes it just sort of starts to develop and happen without us really even knowing it. And so what's happening behind the scenes that we see on the mortgage side that realtors may not see as much is borrowers using that technology to get access to information and product choice in ways that they weren't able to before. And it's leading to good outcomes, which is what we've tried to do. One of the reasons why we created Frank Mortgage was just for this purpose, to be more open and transparent. But so right now there's a massive renewal wave as an example. Here's an example of it. And so when you look at surveys, the vast majority of people are stressed about their renewals, especially people that have, a 3-year mortgage from 2022 or a 5-year from 2020. Rates are a little higher. Can I afford it? What's the math? Maybe they have added other debts too because it's been a bit of a struggle through COVID and some other things. And so now they're carrying a credit card balance and line of credit. And so the renewal's an opportunity. And people are using it to sort of optimize the outcome of the mortgage in ways they didn't before. It seemed borrowers were mostly passive in the past. You have a mortgage with a bank, they send you a renewal letter, you sign it back, and you just move on. But now people are actually being much more proactive about their finances to try to optimize the situation, which is really a good outcome, I think, and something that the technology has contributed to because it delivers an ability for customers to sort of look around the market and find out what else is available other than what they got from that lender that sent them the renewal letter. Is refinancing an option? Is it the smart thing for me to do? Can I lower my payments in some way? Are there other ways to restructure my mortgage to do this, that as well, to improve my cash flow? And now with technology online, rates online, more products sort of being visible online, we're seeing much more of the customer base searching and trying to, optimize that outcome. So that's been a real change in the marketplace and the behavior of the consumers, and I think technology is part of what's driving that.
I think that's something we've seen too, just in our own kind of venue, right, as realtors, because, transparency around like sale prices, for example, right, is something that we've been pushing and doing to get on, realtor.ca and our website so that, consumers can have that really kind of informed picture. Because like you said, that's what they're looking for these days. And that's kind of going to lead into the next question a little bit. Home buyers and people looking for mortgages are evolving, right? Younger, savvier, more digital. What are you seeing in terms of how consumers themselves are transforming in terms of the way how it impacts you serve them?
Yeah, that's sort of the impetus of the business really is there's this, we're not creating demand by creating technology, we're fulfilling demand by creating technology to serve the demand that's there. It's an important
distinction, I think.
Yeah, I think it is. And the digital native customer who's the home buyer of today and tomorrow, the younger generation, millennials, the Gen Zers, they want tech-enabled solutions. When it comes to a mortgage, though, or buying a house, they still want to talk to somebody. It's a bit of a misconception that, hey, this technology is going to be this robotic thing that is completely online and you don't have to talk to anybody. Because even those digital natives that like to do everything on their cell phone and they're comfortable moving money around and buying crypto and doing all these things online, $500,000 mortgage is a big deal. I want to talk to somebody. So, we still give the human sort of customer service level, which is important for our partners, especially realtors. They want to know they're handing somebody off to a person who's going to really take care of my customer. But the technology sort of is the way that we can improve the experience for that consumer who sort of demands that with everything else that they're doing as well, using technology. So, if you look at consumer surveys in the mortgage market, be it a CMHC survey or a broker survey, 3 common themes come up. The mortgage market is cumbersome, it's confusing, and it's opaque. And it just doesn't need to be that way. Cumbersome, we can't fix all of that because a lot of that's with sort of documentation underwriting standards with the lenders. We can improve and streamline that process and make it simpler, but you still have to do it. But the confusing and opaque part of it is completely unnecessary, and that's what these consumers are demanding: more information, more product choice, and technology is the best way to deliver it.
We're talking a little bit more too about like that triangular relationship, right? That I mentioned in the intro: the realtor, the consumer, the mortgage broker. Realtors spend a lot of time understanding what clients want in a home or a neighborhood. From your perspective, what do today's consumers want out of their mortgage experience, and how is that changing? You were talking a little bit about the technology shift before, but
yeah, simplicity and access to information. The feedback that we get where consumers say the market's opaque shows that as an industry we have sort of failed to deliver for the customers. And I don't know if that's necessarily an intentional thing. It's just old practices are hard to break sometimes. And that kind of information is in demand now by consumers who are, sort of digital first, who like to go online and search for things and maybe get a bit of information before they talk to somebody, as opposed to having to talk to the mortgage broker first and ask a million questions. Sometimes you can now get up the curve a bit, then talk to the mortgage broker, and you're having a better conversation because you understand better what you're getting into. So that sort of digital experience is driving outcomes and speeding up the process, which is the other part. If you're going to deliver technology, you better be saving time and money for people. So make it easier, make it simpler, streamline it, and help us find the cheapest alternatives, which for realtors is important in my perspective because, the customer didn't get up today and go, hey, I think I'd like to get a mortgage. They got up and said, I want to buy a property. We take a back seat to the realtor because what the customer is really doing is trying to purchase a property, and the mortgage is a necessary part of it. And so the more we can do to simplify that and streamline it and take the customer's focus off that supposed burden gives them more time to focus on what they're really trying to do, which is buy a home.
Mm-hmm. And, we're talking so much about the technology. Get a little bit deeper into it. So what are the kinds of real technological change that's happening under the hood right now that a consumer could take advantage of that maybe they couldn't 5-10 years ago even?
Yeah. And some of the technology is fairly simple, sort of a tech wrapper around traditional businesses where there's an online portal you can go on and you can give information, but then you're sort of kicked into a traditional process. So the more innovative things that are happening are a couple different things. One, there's algorithmically driven outputs now. So we have a custom algorithm. We take a bit of your information and we compare it against product features from all of our lender partners to help then display to you what may be possible. What products might you qualify for? Sort of like an Expedia type of experience, right? Where you just interact for a couple minutes online and then you actually get some feedback. So that algorithmic thing is new, but that's going to be completely overtaken by the new thing that's happening that everybody's aware of, which is AI. And everybody's probably feverishly working away on it. We are, and a number of the other digital players are as well. And I think there's a view that the ultimate thing for AI is going to be that it will underwrite and make decisions. I don't think that's the case. Regulators and the lenders need a person at the back end to make.
There's always going to be somebody doing that.
Right. AI can streamline that process and help flag things and point things out and make the process more efficient. But for us, the customer interaction online. Have you ever had the experience with those old chatbots? You'd be looking for customer service. You go in, you ask a question, then it gives you a link to some website that doesn't even relate to your question. It's very frustrating. AI chatbots will be much better at that. Customers can talk with the service provider the mortgage service provider, and ask questions about the mortgage. Even get mathematical answers. Like, does it make sense for me to refinance given where rates are? This is my rate. This is how much time I have left on my mortgage. And the AI can just give them an answer and show them the math. So interacting with customers online is going to be improved with those AI tools. The back end, I think, can be enhanced as well for lenders and brokers in terms of the efficiency of their agents and loan officers and that sort of thing, processing documents, doing the mundane. The AI will help with the mundane and leverage those customer service reps' ability to actually service the customers at a higher level. And the third thing on the AI, which is interesting, which I think there's going to be, a development curve that's going to take longer than most people think, which is the phone calls. So they're already out there. There are a number of brokers that have sort of outbound calling agents that are AI, and they pre-screen a customer. So this AI will call the customer, ask a few questions to find out where are you purchasing, refinancing, where you're located, these sorts of things, and then that helps determine which mortgage agent or loan officer they would send that customer to. So it speeds things up. You get greater speed to lead because the AI can call anytime, 24 hours a day. And so those sorts of things don't seem as exciting as sort of underwriting and decisioning, but I think those are really value-added components of what we're trying to build on the AI side. And I think another of other companies are doing the same thing.
For sure. I mean, I know even here, AI is something that we're trying to leverage a little bit more. And I think everybody is at this point, right? Because we've actually had AI people on the podcast who talk about exactly what you talked about, how it can be really efficient at streamlining a lot of those kind of back-end processes where it's a lot of just manual stuff.
Yeah.
That said, we've seen how AI can sometimes appear, AI-ish, I guess, for lack of a better term. What's the kind of balance there, right? For anybody really, I guess, but specifically for mortgage people and what you're working on.
Well, the first principle is obviously, we can build really cool, sexy things with the AI, but it doesn't mean people want it. You have to build what people want and what people will be comfortable with. And I personally don't believe that the majority of customers will be comfortable having a long conversation with an AI, phone agent. The short conversation to pre-screen you and then determine which real human you should talk to, I think is probably as far as we're going to take it right now. And then on the other pieces, again, it can't decision. There's too many risks there for a lender.
Right.
But the efficiency of the processes is going to change, and I think it's going to change really rapidly. So that's a good thing for the customer. Does it mean you don't need mortgage brokers anymore, that sort of thing? No, because you still need the customer service representatives. Maybe we need fewer mortgage brokers because a lot of that mundane work gets done. So instead of a broker being a process X number of files every week, they can process X times 2 or whatever it may be because AI is making them more efficient. So, I think it's going to be mostly behind the scenes. I don't think consumers are going to see a lot of it. They're going to see improved processes, but they're not going to know it's AI necessarily, except for that phone conversation thing. And I think that's where you're going to see some pushback from customers. Someone my age might call in and realize it's AI and just hang up because it's like, that they're offended by it almost.
Yeah. So don't trust it.
Don't trust it. So you have to be careful with it. It'll get better. It'll sound more human as time goes on and that. But I just think we need to be very careful and make sure that what we're building is actually what the consumer wants.
And what's functional, right? We're another question I was going to ask was, talking about how automation can really work well when things fit into kind of a neat box, right? And maybe this is where more of that kind of human interaction comes in. But, how does that kind of handle people with trickier circumstances, right? Or different income profiles or people who just want to talk to a human? They'll have that option, right?
Yeah. Well, with the way our system is set up, it works best with an A borrower. It's most productive with an A borrower, let's say. So somebody comes online, shares some information with us, and they're an A borrower. And there's a number of lenders that would lend to this customer, so there's lots of product choice.
Somebody with good credit, somebody who's
good
fits
credit.
In a good
they
box.
don't have a lot of other debt.
Yep.
They got good stable income that's verifiable, through pay stubs. They're salaried, that sort of thing. And so they can skate through the online process pretty smoothly and choose where they want to talk to us. We try to interact with them early in the process, but some people sometimes come online and just skate right through and then talk to us towards the back end of it. And then we get very engaged and involved in helping them get through the lender process. If you're a B borrower or like you need a private mortgage or something, obviously that's a more complicated structure. The technology still works for you. It just doesn't, it's not as complete a process online, if you will, because of the sort of unique nature of your situation. Your self-employed income is a bit hard to verify and needs a bit of work. Your credit history's, bruised. So, we need to sort of build a story around how that happened, why that happened, and be able to present that to a lender. So they can still come online. They can still give the information. They can still see product choice, perhaps. Sometimes they may not see anything because it's like, we need to find out more about you before we can talk to you about products. But they can still operate in that online environment. It's just there's more touch points with the humans then. You're talking to the agent more. You're spending more time with the agent. You are explaining the story a bit more to the agent. So it still works. It's just not as sort of seamless an experience when you're down the credit curve a bit.
And there's more nuance to it.
There's more nuance, yeah.
Yep.
Yeah.
And so this is kind of Frank Mortgage's offering, right? A fully online experience. What does that actually mean in practice, though? Because, maybe better phrased, what are some of the limitations and trade-offs of going fully online versus doing something in the more traditional path?
Yeah, well, fully online is probably not the best description.
Yeah, because again, you just said there's a lot of people who won't fit into that mold.
You can't escape the need for the human touch
right.
in this business. It's not selling a T-shirt on Amazon, right?
Yeah.
You're taking out a $500,000 mortgage. They want to talk to somebody, but the workflow is online, and so the trade-offs there are maybe more generational. The younger generations are completely comfortable there. Upload your ID, upload your financial statements, or even give us. Some people use Flinks and other things to connect to your bank accounts, so you don't have to upload them. We just they screen scrape the statements and it just makes it really easy. There are generations who are a little more uncomfortable with that and would rather not do it all online. So but because it's still a human business, we can handle those customers as well. Like, you don't have to necessarily live in this online ecosystem to do a mortgage with Frank Mortgage, but it's what it's built for. But we can traditional broker a deal for somebody who just says, I don't want to go online, I don't want to share my documents online, that sort of thing, and that's fine. So there are some limitations for some customers in terms of just the trust and the comfort with the technology. But I think philosophically, it's the challenge of the next step is the thing I'm really focused on, and I find it a bit odd still that the traditional markets that we operate in, the realtor market and the mortgage broker market, treat it as two separate transactions. The purchase is over here, deal with it, and then go over here and talk to the mortgage broker and deal with it. When you go buy a car, you drive off the lot and there's a piece of paper sitting in the passenger seat beside you. It's the lease agreement. It's all right there in one transaction. You bought the car with financing. And I think as technology helps push information in the hands of consumers, I hope anyway, if we get the right sort of realtor partners who are forward thinking on the technology side of things, that we can build that kind of experience too, where obviously for regulatory reasons, a realtor's licensed to do this and we're licensed to do that. We need to separate the roles, but it can be more of an integrated experience for the customer, so they don't feel like they go into two places to get what they're trying to get done. It's a purchase. The mortgage is just a part of it, like I mentioned earlier. So we're hoping to sort of integrate with our partners in that way so that we can create just this sort of unified experience. And then when you imagine it sort of as an online experience too, the realtor can have a system, we can embed our technology with the realtor, and then on the back end, the closing agents, they're online now too. So a customer can have a single sign-on that takes them from looking at a virtual showroom, getting a pre-approval, getting a mortgage, and closing the mortgage, all in that all in that online environment. And that's tomorrow's model, but we're working towards that.
Yeah, and it's because you kind of answered a question that I had coming up here, which was going to be what's one thing you could change about how the model works, right? And it sounds like you've got a pretty clear vision about what you think should happen there.
Yeah.
What's been the hardest part about building a digital-first mortgage model in Canada with Frank Mortgage? You're doing something new in a space that's pretty established. What's been kind of some of the challenges that you faced?
Good question, because there's a lot of challenges. I hope this doesn't sound like a wishy-washy answer, but the biggest challenge is patience. So even from the capital raising side, which is very challenging because there's a lot of other fintechs out there trying to raise money in the space, and a lot of stories being sort of pitched to VCs and other investors. But they have a growth projection that they want to sort of hit. And if you look at anyone who's been really successful in the mortgage market, take like Stephen Smith at First National, or the guys at MCAP, or the guys that built DLC, the big broker, it takes a long time. You don't win trust in the market overnight, in the mortgage market. You've got to build your brand. You've got to build your presence. You've got to prove what you're doing over time, repeatedly, and build that trust with the customer base and become that recognized name that people will trust and go to. A lot of the support systems are looking for something to happen quickly, like the investors. So, the fact that, we are trying to be patient and take the long road here to build what we think customers really want is going to take some time, and that's made it difficult for us to raise money, quite frankly, because people just don't want to be that patient with it.
People want to see something right away, right? And that's maybe a product of society at large today, is that kind of instant gratification.
Yeah, and there's doubters too, because we're in a market that's dominated by a small number of players. The banks are huge here, and they are in a lot of sort of developed economies. I guess the regulations favor big institutions, and so if there's something else I wish we had, it would be more competition. Rocket Mortgage just pulled out, which is a really bad sign for us. They're the biggest mortgage lender in the United States, and they couldn't make a go of it here in Canada. They couldn't scale it the way they wanted to, because you're running into the banks all the time, and the banks are very price competitive in today's environment. And so, it's just a challenging market to really make inroads in. And again, if you try to go too fast, you can burn out pretty quickly because of that competitive pressure that the banks put on you. So you have to take a slow, patient path to get things done.
What's one kind of final thought you'd like to leave with our listeners today, our realtors who are listening on the podcast? Anything that you want to share, or anything that you kind of feel like should be important for our members, whether it's to do with operating in this kind of a market, it's kind of a slowing, emerging recovery from a slow kind of market here, or whether it's something to do with just the mortgage market in general. Any last kind of final thoughts you'd like to leave our listeners with?
Well, not to be scared of technological developments, but embrace them. I think it's times like this. I've seen these cycles a few times, haven't been around for a while. They always come to an end. And being prepared for that recovery is something we all are trying to do. But there's never been a time like this to really add value as an advisor. So a realtor, a financial planner, whatever, a mortgage broker. Customers are in need of help. And so one thing we're doing is trying not to be strictly transactional. You do the transaction and then see ya. Come back to me if you want to do another transaction. We're staying in the loop with our customers and keeping sort of, some information flow going with them, giving them some feedback, showing them opportunities and that kind of thing. And realtors that we partner with, that we work really well with, embrace that and do the same thing. So for instance, right now we have this renewal wave. Those are customers you put into homes, and maybe that renewal doesn't mean that much to you, but some of those customers are going to have to sell. It could lead to transactions. Other customers may have multiple properties and need to refinance those properties, and maybe that can free up some cash to go buy another one. Maybe there's a need to rebalance that portfolio in some way. So we're just trying to use the technology to stay in touch with the customers through the life cycle, not just be transactional and then see you in 5 years when you need another mortgage. And so, I think technology just improves our ability to effectively engage with our customers on an ongoing basis. And I think a lot of the realtors we deal with are doing the same thing. And I think more of us all, brokers and realtors, need to take that approach with our customers.
Certainly what we try to put forward on this podcast too, right, is that kind of new way of thinking and that innovative value add to the services that you offer. That's something we're always looking to try and help our members with. So
Right.
This has been really great, informative insights today. Thanks for being here and sharing your expertise with us.
My pleasure. Thank you.
You know, the shift to a more advanced consumer is something we've seen in real estate, and it's happening in the mortgage industry too. And as a trusted advisor to your clients, having a keen pulse on the latest advancements and unique mortgage options that your clients can take advantage of is a critical way you can stand out. Thanks again to Don Scott of Frank Mortgage for the enlightening discussion today. Thanks for listening. I'm Jesse Lalime, and I'll see you down the next Critical Path.